Hello friends, welcome to the show Bottoms Up Research with Harshit Toshniwal. This video we are going to do a deep dive on hospital sector. We are also going to cover 10 of its largest listed names. It's a 7-part video, so for best understanding would request you all to have a look at all the 7. And one additional thing, if you find this video useful, then please like it, subscribe it and share it with more people. Let us start now. Hi, so we come to the last part of our hospitals industry primer, where we are going to discuss the stock preferences. Over the last 7 parts, we have discussed about the hospital sector, and we have also discussed about the top 9 listed players in the universe. This presentation is going to be a summary across what we have learned in the last 8 slides, and finally, what are the preferences within this particular sector. Now, let me just give a brief about the different companies. All of them have been covered in greater detail in the last 3 parts. Please refer to them if you want to go through the depth of it. But broadly, we look at India hospitals into 4 buckets. One are the NCR focused ones, where typically 50 to 60% of their overall beds and revenues comes from Delhi NCR region. We have 3 such hospitals in India: Max Hospitals, Medanta and Artemis. Then the second category is one where your overall RPOPs are lower, but you command very high margins. So the ones who fall under this bucket are 2 hospitals, KIMS and Kovai Medical. Both are south based ones. Then the third category is more towards the players who have a overall pan India brand and a relatively diversified presence. Apollo, Fortis and Narayana are the 3 which come under this bracket, and then in the end single specialty, where a large part of the revenue is driven by one particular specialty. So it's a cancer for HCG, and for Rainbow that specialty is childcare and the mother care. Brief background about Max Hospitals: it was started by Analjit Singh of Max Group, but in 2018, because of the difficulties in the financial part of Max Group, they had to sell this to Radiant Group. Radiant Group is led by Abhay Soi. Abhay Soi is renowned to be one of the turnaround specialists in the healthcare industry. He is from a non-medical background, was a restructuring professional till 2010, but after that he took the operations of BL Kapoor Hospital in Delhi, turned it around. He then turned Nanavati Hospital, Mumbai, and in 2018-2019, along with KKR, he bought out the Max Hospitals from Analjit Singh, and over the last 4 years they have even turned that around. Now it's one of the most profitable business with around 25% margin. The second one is Medanta. This was founded and is owned by one of the most famous cardiologist surgeon, Dr. Naresh Trehan. It was established in 2009. It's around 2,500 bed facility, of which around 1,300 is their flagship MedCity hospital in Gurgaon. Over the past year, they have expanded to other northern cities like Lucknow, Patna, etc. So that is the second one. The third is Artemis Hospitals. It was founded and owned by Apollo Tyres Group. This is not a chain. It is there in a single location, Sector 51, Gurgaon. The region is a very attractive one. That particular unit is something which is very well connected with the airports, etc., and which is why there is a lot of international tourism in that particular region. Artemis is considered to be one of the good hospitals in that region, but again they are going to do some brownfield expansion within that same unit itself, adding more towers near to the existing hospital. Plus they plan to do some asset light initiatives like Artemis Light, which is a primary clinic business model. Plus they want to do luxury birthing centers, 2 or 3 of them. Their margins are lower because their doctor payouts are higher, given its relatively subdued brand versus the others, and at the same time there's a lot of competition in the NCR region. So that was about these 3 hospitals. When we look at KIMS, it was founded and owned by Dr. Bhaskar Rao Bolinani. His succession is very well planned. Dr. Abhinay Bolinani, he's the CEO of the company. And what is important is that KIMS has around 4,000 beds today, but their flagship hospital is the one in Secunderabad, Hyderabad. It's a 1,000-bed hospital from where they started. Their approach is very different in the fact that they do a JV with the successful partner of that particular region, local doctor. They have the expertise in managing the hospitals, plus that JV with the doctor of that particular region gives them the advantages of faster occupancy, recovery and footfall coming to that hospitals. Again, as a group, they have been masters in executing this, and commands one of the highest margin in the industry. Kovai Medical, it's again a single location hospital in Coimbatore. It's a 1,000-bed hospital, which was originally there, and what they have added recently is a medical college along with 700 hospital beds. So altogether they have around 1,700 bed capacity. It is founded by Dr. Nalla G. Palinswamy. Now the expansion is now over. What is going to be critical is that how they are able to increase the occupancies and maintain the margins despite having a medical college associated hospital. That's there in Coimbatore. When we look at the other hospitals, so Apollo, one of the most diversified ones, but they derive 55% of their revenue from hospitals, but pharmacy also contributes around 30% of their overall revenue. Balance of their revenue is contributed by other smaller things like hospital, Apollo Diagnostics, Apollo Cradle, Apollo Spectra, etc. It was started by 1983 by Dr. Pratap Reddy, one of the famous cardiologists. They started from Chennai, but now they have a decent presence even in East, South and Central India. Their Apollo 24/7 is the digital health arm. My sense is that given the strong background they have and given the strong supply side strengths of doctors, pharmacies at the back end, the way Apollo 24/7 has scaled is not yet very satisfactory. They could have done much more. The current burn in Apollo 24/7 is around 500 to 600 crore, vis-a-vis around 2,000 crore of EBITDA which Apollo business throws. How that performs is going to be very critical for Apollo's investment thesis. The second one is Fortis. Really like this hospital brand, and the good part is about diversification. They don't have any major hospital contributing more than 15% of their overall revenue, and they have most of their hospital, even the larger ones, are in the range of 200 to 300 beds. So that makes it a genuinely very well diversified. History of the group, so this was started by Singh brothers, who were the grandsons of Ranbaxy founder, but later on IHH group bought it out in 2018. Still, I think IHH is a very good group. They have brought in Dr. Ashutosh Raghuvanshi from Narayana to run the show in 2018, but what remains a question mark right now for Fortis is the clearance on the legal issues around the Daiichi challenging the deal of Fortis Hospital sale. Greater details about that deal and the challenges are there in the earlier part, which you can refer. Narayana, it was started by the renowned cardiologist Dr. Devi Shetty. He started off in Karnataka. Their approach towards building this has been to create cluster and have center of excellence for a particular specialty in one of those hospitals in that cluster. So any of that particular specialty within that cluster can be referred to that hospital. That's why in Karnataka they have their center of excellence of cardiac in NICC. Similarly, they have a center of excellence for oncology in their Mazumdar Shaw Hospital in Bangalore. That has been their approach. Another differentiator has been, barring two hospitals which they own, they generally do tie up with charitable trust, government bodies, not-for-profit organization. As a result, their cost of setting up a hospital is lowest at around 30 lakh per bed, which ranges anywhere between 1.5 crore in similar regions. But consequently, their ARPOBs are lower. They charge 15 to 20% lower than peers, and 60-65% of their beds are allocated to general wards. They have also expanded to Cayman Islands out of India. Narayana derives in around 30% of its profit and 20% of its revenue from the Cayman Islands. So that is on Narayana. When it comes to single speciality, HCG is one where 95% of their business comes from cancer. They have a 5% market share within all the cancer patients, and it's the largest comprehensive cancer care across India. Cancer is again one of the fastest growing non-communicable diseases. It is roughly around 10% of the overall deaths. It was founded by Dr. Ajay Kumar, but because of the financial leverage in around FY20, they had to bring in private equity and dilute the stake. So private equity right now is the majority owner with 57% stake in the company. Over the last 7 years, they were more focused in growing the business, but because the unit economics was something which was not very sorted, they used to operate at around 10%. Even currently they operate around 10 to 12, 15 to 15% of net of rental margins. Now that going forward, the focus is going to be on consolidation. They have 22 centers today. They are going to keep that stagnant, and focus is going to be improving the economics. Rainbow Hospitals, it was started as a purely by Dr. Ramesh Kancharia in Hyderabad. So it is one of the most famous pediatric obstetric hospital in Hyderabad. It still forms 50-60% of their overall revenue, but I think they follow a hub and spoke model with one hub of 150-250 beds and 3 to 4 spokes of 50-70 beds around that. The question is that can they replicate the success of Hyderabad within the newer cities where they have went, say Bangalore, Chennai, Andhra Pradesh and Delhi? That is going to be the key question. This is a broad summary of the hospitals. Now if I look at the overall bed and the level of occupancy, so Apollo, these are the operating beds and not the bed capacity. Apollo operates, Apollo, Max, Fortis, most of the larger hospitals operate at around 65-70% occupancy. For HCG, the occupancy is around 60%. Rainbow, the occupancy is lower, 45%. Lot of it is also to do with the numbers being FY22, which was impacted to some extent for many of the childcare and the specialty care ones. Let us have a look at the overall expansion. Right now, the top 10 players which we have taken, the total current bed capacity is around 33,887. What they have announced for expansion till FY26, so in the next 5 years, 4 to 5 years, is a bed addition of around 8,360, which is 25% of the existing capacity. Now, if you look at two hospitals who are most aggressive are KIMS and Max Healthcare. So KIMS plans to add 4,000. So they have 4,000 beds. They plan to add another 40% of this existing base, 1625 beds over the next 4 to 5 years. Similarly, Max, a large part of KIMS hospital bed addition is going to come in Bangalore. It's going to come in Nasik. It's going to come in the western region, Mumbai, Hyderabad. So these are the key 4 regions for them to grow. For Max, they plan to add 2,300 beds over the 3,500 beds which they already have. It's a 66% expansion. Large part is going to be operational in 25-26, and a large part of this is coming in the region of Delhi itself. Amongst the other who have expanded, so Apollo has planned for a 2,000 bed expansion, 20% of its overall bed capacity. For him, again, things are going to get operational in 25-26, but the regions are Delhi, Chennai, Bangalore and Mumbai, roughly equally split between most of them. HCG is more in a consolidation phase, not much addition. Rainbow is going to do a very gradual expansion. Narayana is also going to do 300-400 beds per year of addition. Fortis is actually focusing more on brownfield, so he has scope to grow in the 3 Delhi NCR regions of Shalimar Bagh, Noida and one more. So he will do the expansion on a brownfield way and the Bangalore BG road. So there is not going to be much occupancy pressure or margin pressures involved in its expansion. All in all, if I look at the 8,300 beds, 42% of them are going to come in Delhi. The positive part is that there is international business which will increase. That is going to support, but the negative part is that overall competition in that region is also increasing, which might cause near-term pressure on margins. The second highest addition is going to come in Bangalore, which is going to see around 20% of the new beds from Apollo, from KIMS and from Fortis. So all the 3 large hospitals are going to expand here. Mumbai is going to see around 13% of the overall bed additions, while Chennai is going to see only around 7% of the bed additions. Now, which is why I think a typical thing to understand is that in any hospital cycle, there are three: that you do a lot of capex, and as we discussed, it takes time, then 3 to 4 years for the capex to get consummated and your business breaking even and making 15-20% margins. And once they make that, then again there is a period of good profitability growth. Now for most of the Indian hospitals, they had put a lot of capex till 2018. From 2018 to 2022, because the balance sheets went leveraged, people tried to consolidate, and that was the period where we saw a lot of profitability coming in. But now again 2022 starting, we are seeing a lot of capex mode starting. Again, this sector needs to be watched in that manner because of the cyclicality of margin when you expand very fast, and that gives good opportunities to enter. This is a summary of the specialty mix of the listed hospitals. As we discussed, that the single specialty hospitals are few: Agarwal Eye Clinic in ophthalmology, HCG in cancer care, Rainbow in mother care pediatrics. Shalby is very rich, so he has a very high mix of orthopedic business. The other business contributes around 5 to 10% of the revenue, but they have started increasing. Narayana and Medanta, the cardiac exposure is relatively higher, 35 to 35%, primarily because they were started as a cardio first hospitals, but over the years they have also expanded into the other fields. Renal, onco, neuro, ortho forms around 5, 10, 15% of the overall revenue. When we look at Max, Fortis and KIMS, for them, for Max, onco is 23% with a very balanced mix towards the other. For Fortis, cardiac is around 19%, and others follow a very balanced mix. For KIMS, also cardiac is 19%. They have ortho at 16 because of the Sunshine acquisition. So this is broadly the case mix for players. In terms of payer mix, cash and insurance business forms roughly around 75 to 80% of the overall business for most of these hospitals. For Rainbow, it's 100% cash and insurance business. They don't have international business, but they also don't have any government and PSU business. Government PSU business is higher for Shalby, HCG and Agarwal, Shalby, HCG and Narayana. Reason is to fill in the lower occupancies. When we look at international business, that is higher for people there in Delhi. Max, Fortis, Medanta and Narayana. Max, Fortis, Medanta and Narayana both have around 6 to 8% of revenue coming from international patients. If I look at the margin comparison across players, then clearly the ones with the best margin is KIMS, which operates at around 31%. This is FY22 data. Numbers have changed in H1 FY23. One of the largest reason for KIMS is operating at such high margin is the rental cost. And I think this is an important point. When we look at players like HCG, Rainbow versus the other players, we need to differentiate on one thing. King's flagship hospital in Secunderabad, which is a 1,000-bed hospital contributing 50% of their overall revenue, that's an owned land, so you don't have much rental cost. You have an advantage to the rental cost. Similarly for Medanta, their Med City hospital is on owned land. That's around 50-60% of their overall revenue. Hence the rental costs are much lower. For Narayana, as we said, the large part is on partnership model, which is why their rentals are much lower. Fortis and Max have a lot of old land which are there. So the point is that, but when we look at HCG and Rainbow for that matter, a lot of them are on the leased land and they are also present in the center of the city. As a result, your rental costs are 7 to 8% of revenue, which eats up to the margin. As a result, margins of HCG are only 10%. For Rainbow, since you have the advantage in terms of gross margins being much higher than the peers, because of your category, you command a 23% margin. When we look at Medanta, an interesting thing to observe is that the doctor payout ranges around 15-20% of the revenue for most, but for Medanta that is only 10%. The reason is that it is compensated by the higher employee cost for them, because they keep a lot of doctors on their own payroll. Broad picture about the margin analysis. These are few forecasts. A lot of the details are there in the individual parts, but in Apollo the bed growth is going to be gradual in FY 23-24, not much bed addition. We are forecasting a 7% of RPOP growth over the next 2 years, because the mature hospitals are the ones which are there. So all in all, their overall revenue at the current valuations. And one more thing, all these are basis the prices on 30th November 2022. So at the current valuation it forms around 27 times EBITDA, which I think is slightly expensive, and given the fact that Apollo 24/7 is something which I don't believe execution has been up to the mark till this point of time. On Max, a lot of the expansion is going to come in FY 25 and 26, but which is why the numbers might at least on the valuation part, 23 times EBITDA might look expensive, but a large part depends on how their execution happens on the newer assets. If they genuinely turn out to be a very great execution like past, then even at this prices it has returns to be made. Fortis hospitals, I believe the valuations are driven by the fact of the pending legal case. Otherwise the business has been showing good signs of turnaround. Narayana, the business trades at relatively lower multiples, but there are justified reason for it because of limited triggers. KIMS, I think, trades at around 22 times 24 EBITDA. Their overall growth is going to be fast. Over 23 to 24, they'll be adding around 1200 beds. As a result, their occupancies might moderate out, but overall the growth rate for KIMS is going to be healthy over time. And even their margin profile is something which is going to moderate in 23-24, but it is then gradually going to pick up as the hospitals mature, the newer ones. Medanta, the recently listed one, trades at around 18 times EBITDA. They don't have any major expansion next 2-3 years, which gives them scope to improve their overall margins. HCG trades at 16 times EBITDA. I think there is no question on the growth part. It's in a segment which is one of the fastest growing ones, but the question is on the margin profile part. If they can improve their overall margin profile from 10% to 15% levels, then there's a lot of money to be made in this name. In Rainbow Children, it trades at around 22 times 24 EBITDA. I think that the childcare specialty hospital is a very good business, but there are regional leaders in every place. So the question is, can they replicate their success in Hyderabad to the other regions like Bangalore, Chennai, etc. Artemis Medicare and Kovai, these are small cap companies, so they are not very liquid in terms, so price discovery might take some time. But Artemis, I think it trades at around 12 times EBITDA. I believe the margin profile is going to be sustainably weak under the current management. So the reason to look at Artemis could be one, if someone believes that it can be an acquisition target, it is going to be a very good acquisition target because it is present in a very good location in Delhi NCR, and anyone who comes up will have the potential to improve the margins. So effectively, if say for example Max decides to buy Artemis, then he has the potential to improve the margins from 13 to 20%, which implies that he will be buying that asset at 6 times EBITDA, roughly a quarter of what it itself gets valued at. So it can be a good acquisition target, but otherwise I think the newer initiatives which they have taken on daffodils, the luxury birthing center, their Artemis light, etc., how that execution happens is going to be key. Kovai is an interesting asset. It trades at around 7 times EBITDA on 24. So in Coimbatore, it's one of the very well recognized hospitals. They have recently expanded from 1,500 beds to 1,700 beds. Now, but this expansion has taken along with a medical college. So that 700 addition is something which is attached to the medical college. Whether they are able to maintain such high margin profile in that particular hospital is going to be the key. If they do it, then it's a good asset. Now coming to the final part about what are the stock preferences, what I'll say is that when we talk about preferences, we try to bucket the hospitals. This is again the valuation curve, so the ones which are reasonably lower valued compared to others are Artemis and Kovai Medical. Again, these are micro cap, small cap entities with single unit. My sense is that I would prefer to be with Kovai Medical rather than Artemis if I need to be in this space, for two reasons. One, in Artemis, I think the margin profiles are weak, and as a result, I think that existing internal accruals will not be enough to support their newer initiatives in the luxury, childbirth, and the other ones. Kovai Medical in turn has done is that he has used its cash flow to build a medical college. It will take some time, but this medical college can be a good doctor hunting ground for them, and simultaneously they have added beds in this medical college hospital. Over time, if they are able to maintain the margin profile of their existing business along with here, then there is a good money to be made at a reason. It is something which is at a reasonable valuations on FY24 basis. The second set of hospitals are one where there are valuation comfort, but the question is about the re-rating trigger. HCG, Fortis, Narayana, all of them trade at around 16 times 24 EBITDA. My preference is HCG and Fortis. Why? In HCG, I think there is a very good chance for them. There is a good if they work around the unit economics, then they can improve their overall margin profile. And once that happens, it's a very good asset in terms of the oncology segment presence, where the growth rates is going to be much higher than the other specialities. Fortis, I think the key overhang has been the legal issue since 2018. Otherwise, IHH has done a lot of positive steps within the hospitals. They are showing initial sounds of turnaround. So again, this is one of the bet which I might want to take. Narayana, valuations are not rich, but I think that they miss the re-rating triggers. I somehow don't have a lot of confidence on their execution capabilities, and there is not much clarity on the growth which they are providing at this point of time. So my preferences are going to be HCG and Fortis. The second set are which are slightly expensive, but the question is that do they have, and they are good brands, established businesses in that particular region. But the question is that what is the scale availability for Rainbow? They have proven themselves in Hyderabad, but can they do it in Bangalore? Can they do it in Chennai, etc. is the big question. My sense is going to be it's a difficult task to expand in a childcare hospital and build a brand in a newer region. But we are going to see. But current valuations at 22 times FY24 EBITDA makes me slightly wary. Medanta, I find it to be a very strong brand. More from a clinical perspective, the brand advantage is definitely going to be there with Medanta, and at the same time they operate at around 20% margin versus 25% margin for a lot of players in the similar peers. And plus, their model of having doctors on payroll has few advantages. It gives you more stability as a business. For example, if you have a fee for service consultant doctor, then he might not allocate all the businesses towards your hospital, but having it on payroll gives you that stability. Plus, you can remunerate the doctors in form of ESOPs, etc. in different innovative ways, rather than just having a doctor share model relationship. So which is why Medanta is a differentiated model. I would want to see them execute on the growth part gradually and the margin improvement part, but I think it's still one of the better bets in the multi-speciality hospital, baking in the valuations part itself. The next set of hospitals are ones which are relatively even better valued, but they have a very strong execution track record, both, and at the same time both of them are very growth hungry managements. Literally, this is the best combination you can have in a structural sector like healthcare. The two hospitals, Max Healthcare by Abhay Soi and KIMS by Dr. B.R. Bolinani. I think both of these managements are top notch. Both of these assets offer very high growth strategy, and both of them are growth hungry. Execution will matter. They trade at around 22 to 23 times FY24 EBITDA. Relatively rich, but these are two hospital I'll always buy on dips or any major correction. The last one is Apollo Hospitals. My sense is that there is an uncertainty in terms of succession after the four daughters, and also it's a rich valuation. One might justify the valuation using the Apollo 24/7 business, but to my experience, it has not yet executed that very well. So it is going to be an avoid for me. So overall, when I look at my preferences, four hospitals which I am more positive about are HCG, Medanta, Fortis and Kovai Medical. The few which I might want to add on dips or any major correction are Max and Kims. On Artemis and Rainbow, I think I'll still see how things pan out. Artemis might be a positional buy if there is any scope for inorganic acquisition or something. Rainbow, I think if they execute well outside Hyderabad, it might be a very good investment. And I'm slightly bearish on Apollo and Narayana. In both cases, in Apollo, I think it's slightly overvalued given the cash flow profile of the business, and Narayana, I believe that there are limited triggers for it to re-rate. So that is an end to the overall discussion, and I think in the last 7 parts we have covered a lot about hospitals, starting from the basics of hospitals, the different case mix and the payer mix for hospitals, the economics of a particular hospital. We have discussed about the top 10 hospitals in India. Thanks a lot for your time. I think it has been great learning the sector and sharing it with you all. Thanks a lot. Hi friends, so I come to an end to this part of my presentation, and like hospitals, I wish to cover more number of sectors over time. I've done a similar work on cement industry. The link to that is in the description below. Would love to hear your feedback and any other sector you want me to cover. But have a great day. Thank you.